Let's talk about the spending pulse report for September. It's the last one before it kind of seems the holiday season really starts. Seems like the holiday season starts in October now. What do we learn about the consumer in September? What can we read into when it comes to the holiday season?
Well, our spending pulse data showed spending measured as retail sales ex autos was running about 2.2% on a year-over-year basis in September, which is pretty consistent with the trend that we've seen, which has been hovering just around 3% if you look at the last few months. September did have a number of special factors, including, of course, Hurricane Helene, who hit at the end of the month in the southeast. And we certainly saw the impact in those states, particularly in things like restaurant spending, which fell briefly into negative territory. But of course, the hurricane allows for reallocation of spending into other sectors. There's lots of movement of people of money. And then when stimulus comes in with the rebuilding. So lots of noise at the very end of the month, but overall consumers that are still out there spending based off of those fundamentals that you just talked about, Frank.
Are you surprised that the rise was only 2.2%? We saw in the jobs report that wage growth is actually like 4% year over year. I mean, it really seems like job gains are strong, wage gains are strong. People may have more money than we previously thought.
Well, to your point around, do people have more money than they previously thought? There was also the revision that happened 2 weeks ago to the GDP accounts, which revealed a higher savings rate than we had thought previously. So, yes, certainly when you look at the jobs numbers with income growth, when you look at savings that's still running just above 5%, when you look at household balance sheets in terms of asset price appreciation, it is a supportive environment for the consumer. And again, has been for some time. Any given month, there's noise, there's volatility, as I just mentioned. There's a few really special factors in particular this month, but the overall trend has been one of really kind of modest spending. Real spending is another important point. Real spending has been picking up a bit because we are seeing some of these disinflationary pressures.
All right, I want to dig into your report. Restaurant sales up 5% year over year. I don't know if that's that surprising. I mean, it's still kind of warm out. People like to go out and eat. But this one kind of caught me off guard. Jewelry sales up 4% year over year. What does that tell us about the consumer? I mean, during the holiday season, jewelry sales generally pick up. But the fact that we're seeing that in September.
Yeah, so it was a little bit of a Labor Day story, actually, in terms of perhaps some people going out with the long weekend, end of summer, and jewelry did see some benefit. It's actually something we dug into in a lot of detail in our most recently released holiday sales report, where we looked at how consumers have been changing their behavior across lots of different categories. And jewelry was one that was really interesting to us because it's a category where there's lots of innovation. There's lots of new names. There's a lot of support from a marketing perspective in terms of social media around jewelry. And what we saw in particular is some of the new names that are really focused on the younger population, Gen Z, younger millennials, are seeing this real pickup in activity that's quite meaningful.
I want to go back to your holiday forecast, just over 3% year over year growth when it comes to sales. Yesterday, we had an analyst on saying discounting is going to be about half of what it was in previous years, closer to about 30%. I want to ask you that 3% rise. Is that consumers willing to pay more for holiday gifts and things than they have been in previous years, or is that people genuinely spending more?
Well, I think it's honestly a bit of both because we know that promotion periods are not consistent throughout the holiday cycle. And that holiday period is really long, as you just mentioned, Frank, starting probably now, if not already has started. So here's what we think when we look at the data. It's really important to break down holiday sales into real spending volume versus pricing. When you think back to the 2021, 2022 numbers, we had really, really impressive gains in holiday sales, but it was driven by inflation, by that increase in pricing. That changed last year. And I think that we're still in an environment where promotions matter a lot to consumers. Consumers are trying to find value. If you look at survey data, there's still an environment where there's belief around low and steady inflation. And I do think that that's a driver for consumers.